Greetings. Welcome to the United States Black Chambers Members Only Conference Call. My name is Brian Morris, the partner with the United States Black Chambers Business Directory, the largest black business directory in the world, where we list over 100,000 black-owned businesses around the world. So I am excited today because we interviewed Industrial Bank, one of the oldest black-owned banks in the country. And we had online Jacqueline Bowles, Senior Vice President and Director of Retail Banking, Staria Williams, Vice President of Risk Management, and Quasi Irving, Vice President of Commercial Loan Officer. So today we'll be discussing the power of banking black and how we gain access to capital through black banks. Before we go into the call, I'm going to ask everyone to download our app, the USBC Directory app. You could download it on Apple or you could download it with your Android phone. So again, that's USBC Directory mobile app where you can find black businesses all across the country. Let's go into the phone call.
And I'm pretty excited because one of the things that I'm always discuss and one of the things that we really want to focus on, and I talk to so many businesses around the country, and one of the things that's a really, really big issue is businesses being able to gain access to capital. And a lot of the businesses, they cannot gain access to capital, and that's an issue for them, for their business, and it's an issue for them to be able to grow. And so what I'm going to do is I'm going to start off with Industrial so that they can introduce themselves. They are on the call today. Industrial Bank is one of the oldest black banks in the country. And again, if everyone can place their phone on mute, that would be great. Industrial Bank, again, is one of the oldest black banks in the country. And I think a lot of people, which are members of the chamber, are actually not aware of Industrial. So we really want to make everyone aware that they exist, who they are, and we know how difficult it is for individuals to be able to gain access to capital. So we want to try to make that process easier, or at least make you aware of black banks here to assist you, to help grow your business, and help connect you to opportunities to help you grow over time as well. So Industrial, whoever would like to start, I guess probably Jackie would like to start. If you'd like to go ahead and introduce yourselves and tell us what you do. And again, if everyone could place themselves on mute, that would be great.
Thank you, Brian. Good afternoon. My name is Jacqueline Bowles. I'm the Director of Retail Banking and the Deposit Operations Department.
Hi,
Perfect.
my name is Star Williams. I'm Vice President and Risk Manager here at Industrial Bank.
Yes, good afternoon. My name is Quasi Irving. I'm Vice President, Commercial Loan Officer here at Industrial Bank, specializing in what they call the CNI, which is Commercial and Industrial, and SBA lending.
Perfect. Okay, so Jackie, you're probably the designated one. Just to give everybody an overview of Industrial, the history of Industrial, and just in a few minutes, tell us what you do and some of the history about Industrial Bank.
Sure. So Industrial Bank is an African-American-owned bank. We're the third generation. It was started back on August 20th, 1934 by Jesse H. Mitchell and 9 other businessmen in response to our community, specifically minorities, not having full access to banking products and services. And so now today, 84 years later, we have 7 branch locations, 5 in the District of Columbia, 2 in Prince George's County, soon to be 8. We are what's called a CDFI, which is a Community Development Financial Institution. What that means is that we reinvest 60% of our assets back into the communities in which we serve. We do that via small business lending. We do that via home loans. We do that via sponsorships and financial literacy, free financial literacy, which we have identified as an area of great need throughout our community. And so we're a local bank. We're a community bank. We focus on relationships. We also really are just deeply rooted in the community. We are focused on impact. And so we realize that the more we're able to support specifically the small businesses in our community, the more we're able to impact the level of employment, because as our businesses grow, they increase employment levels. They're able to grow and thrive. And so really that's who we are in a nutshell. Like I said, we're a local bank, so you have an opportunity to build relationships with your commercial lenders, with your residential lenders. Just as an example, last year I want to say we had 7 first-time home buyer programs, and out of those 7 programs, we had 35 new families throughout the DMV area that became first-time home buyers. And so that's pretty much who we are and what we strive to do.
Which is great. Anybody else on the team want to add anything to that?
Yeah, I'll just add to what Jackie said, specifically as it pertains to relationships. One of the benefits that you have dealing with a minority bank is the fact that we take the time to develop and cultivate relationships. And as I like to tell any existing customer or prospective customer, the cultivation of a relationship gives us a chance to tell your story and advocate for you when it comes time to seek out obtaining financing by a bank. The benefit of that relationship development is we just don't put you in a box and run some numbers and make a decision. We, again, like to take our time, perform due diligence, understand, again, the overall need of what you're looking to do, and in that, serve our community. So I just want to stress the importance of relationship development and cultivation in the financing process.
Perfect. That's extremely important, because one of the things that I want to help us to accomplish today on the conference call is the importance of building a relationship, a long-term relationship with our banks. So it's not about
Justin Brown, Statesville Black Chamber.
Welcome, sir. If you could go ahead and place your phone on mute, that would be great.
Okay.
Perfect. So it's all about building a long-term relationship with the bank, so that when you need the bank, they're there. But it's over time. It's not about, sometimes you may be turned down the first time. But if you work together with the bank and they teach you and show you what to do, over time they can help you get to where you need to be and help grow your business over time. So I'm going to come back to that, but I want to ask the team, tell me about the Bank Black movement. How did that affect your bank? How did that affect Industrial Bank, the Bank Black movement?
Sure. And so let me just also mention to everyone on the call, we are a full-service bank. So we offer the entire suite of products for consumers and businesses. Right. Relative to the Bank Black movement, it was quite an experience for us. It brought a higher level of awareness to those throughout our communities. We witnessed a direct and focused intention on supporting Black banks and Black businesses. And so although it, sort of came out of a critical and a very unfortunate circumstances, the banks and many businesses in turn did see positive impact. The challenge for us, Brian, and those on the call is that while it did raise awareness, a lot of individuals would just open a checking account and put, $25 in and say, okay, I've done my part, I've Bank Black. But what people don't realize is that basic checking accounts with smaller balances are actually a liability to community banks. And so what happened is we almost checking account ourselves into some situations. And so the challenge now is to manifest those relationships to really just, I don't want to say cross-sell, but have a thorough relationship where we have credit cards with you, we have business loans with you, we have the checking account, the savings account, your full relationship, so that we in turn are able to, as a CDFI, reinvest back into our communities. And so the positive is that it raised awareness. We have exposure and access to many more customers, but now the challenge is to sustain and to build those relationships.
Now, you mentioned some really good things. The first thing you said was, it was almost a problem because you had too many checking accounts. Now, explain that. Elaborate on that for those of us that may not understand that.
Okay, so checking accounts for a bank, we have to order a check card, which just in general costs $13 to order the check card for you. It's about $5 a month to print your statement out for you. And so checking accounts come with internal bank costs. And so if we have a checking account that just maintains a $25 balance and we have to send out that monthly statement, which is about $5 a month, different things like that, it can be a liability to a bank. And so while we appreciated that, we needed to have larger balances and just larger relationships in whole with just a variety of products and services. We strive to be the top wallet bank. We want to be the first bank of choice where you do everything with us, from checking accounts to your CDs, savings, and lending needs.
That's great. It's about the long-term relationship. And you also mentioned CDFI. What is a CDFI?
CDFI is Community Development Financial Institution, and what that means is that those individuals that have that certification are required to reinvest a certain percentage of their assets, 60% actually of their assets, back into the communities. And like I stated, we do that via small business lending, residential lending, sponsorships, financial literacy, efforts that will help to improve the conditions of our surrounding communities in which we operate.
Okay, great. Okay, so this is all really good information. Campaign Money Made Here Stays Here. We talked about a little bit of that when we did the video for Industrial. I don't know if everyone on the call was able to get a chance to see the video. But if someone on the team can explain, which obviously hints on what you just talked about, Jackie, but if someone on the team can explain the Campaign Money Made Here Stays Here and how that helps black businesses.
Well, the campaign Money Made, first of all, this is Star Williams. The campaign Money Made Here Stays Here is the bank's commitment to reinvesting in the communities in which we live and we work and serve. So our goal is for wherever our branch locations are, those neighborhoods, we want to put families in homes. We want to help small businesses open their doors. We want to help growing businesses expand. Our goal is to put back into the community and be an asset, a first resource, and an asset for our communities because we understand the direct impact that is. If you have, in the video, and we say that all the time, if you have lived or been around the D.C. area for a number of years, you understand the dynamics and the change of the U Street corridor and the H Street corridor and NOMA and different neighborhoods, and you might see it in your own respective cities where there were once neighborhoods that didn't have a lot going on, and as a result of emerging businesses and families moving into those neighborhoods, those communities are changing. And so Industrial Bank is committed to being that partner with the people in the community. We want you to come to us as a resource, whether it's just for advice or whether you really want to establish a relationship. We're a financial resource for you because we understand how that benefits the community.
Perfect. Let me do this real quickly so that way we don't have any distractions. I'm going to place everyone on mute. And Melanie, did you receive the email that I just sent to you?
Yes.
Did you receive it, Melanie?
Yes.
Okay. I'm going to place everyone on mute and just follow those instructions. That way you can get back on. Give me one moment. Okay, Melanie, you guys should still be able to hear me. If you could go ahead and follow your instructions that I just sent you, you guys should be back on. All right, you there?
Yes.
Okay. All right, go right ahead. So now that should be good. We had a little music going on in the background. So, sorry, if you can give us just a little bit of that right at the end, what you were saying before.
I was just saying that Industrial Bank is committed to being a thought leader and a resource when it comes to developing communities in which we live and work and serve. So whether you're looking to purchase your new home, whether you're interested in starting a business, if you're an existing business that's looking to expand, we consider ourselves a financial resource for you, and we are committed to partnering with you to making those things happen because we understand the importance of thriving communities.
Well, that is important because I think that's what a lot of our business owners, as I've talked to many of them over the last couple of weeks, one of the questions is, what makes a black bank different from a traditional JP Morgan, Bank of America, Wells Fargo, all of the other institutions. Why should I go to a black bank versus going to those other institutions?
Well, I think what makes us different simply is the history of our ownership. We are a minority-owned financial institution, and so that's what makes us different than a Wells Fargo or something in just the overall operational structure. But I think what sets us apart is that we are relationship oriented. So you're not just an account number, you're not just an identifying number. You can walk into any banking center, you can pick up the phone and call any employee, and you're going to get customized customer service. We're going to remember that your child is graduating from high school and ask you about that. We're going to remember the last time you came in and talked to us about a family vacation. We're going to remember those conversations about you wanting to purchase your first home because when you first came to the bank, you were just a student in college. We are interested in a relationship with you and how that relationship matures over time. So it's not just you walk in the door today and then we forget about you. You walk in the door and we want to be a part of every piece of your life where there is a financial need, and we want to offer those services and that commitment to you. That's what probably sets us apart, really, aside from just being a minority-owned financial institution. That's what sets us apart from other financial institutions.
Perfect. Anyone else in the team want to add to that?
This is Jackie. The only thing that I would add is just going back to that community reinvestment. Pound for pound, even when you compare us to some of the larger commercial banks, we reinvest a larger percentage of our assets back into the communities in which we serve. And the majority of our communities are the low to moderate neighborhoods. And so just one of the things that has really just brought me delight over my years of working here is seeing individuals' lives transform, seeing businesses grow and, reach their strategic goals from year to year. And so, it's just an amazing experience when you partner with Industrial Bank or your local community minority bank.
So I'm going to ask you guys, I'm not going to ask you this question now, but I want you to think about it, team, so that we can give some actual examples. If you can give us some examples of some businesses that you have helped and Industrial Bank has helped over the years, and how you helped them grow and what a loan has done from Industrial Bank to their company. So I want you to think about that. If you can come up with maybe 2 or 3 examples, so that way we can give that to individuals who are listening around the country. So right now on the phone we have black businesses around the country, and many of them are, the thing about black businesses, people always discuss how sometimes our black business owners never go to the bank and ask for a loan because they're afraid that they might get turned down. How does Industrial deal with someone who might be afraid to go get a loan, or who dealt with rejection in the past, or they've been turned down for a loan in the past? How do you help get them to the point to where they are to the point to where you can give them a loan?
Kwesi, are you there?
He might be muted.
Oh, you know what? He didn't get our message. He doesn't know how to mute. All right, hold on a second.
Yeah, if you go ahead and send it to him, and if someone else wants to take that question.
Well, Kwesi's the expert. Yeah, he's the expert. Hold on a second.
Okay, no problem. Well, let's. Why are we doing that? Tell me about the CASASA Rewards Program.
Sure. Well, thank you so much for asking. That is our pride and joy. CASASA, ladies and gentlemen, is our robust rewards program. CASASA sounds nice and Afrocentric. It doesn't really mean anything other than it is a little river somewhere on the continent of Africa. But, again, it's a rewards program that we've had for about 2 years now. And so very quickly I can summarize it for you. You can either earn 2.5% APY on checking account balances up to $15,000. Anything in excess of that will pay 0.75. Or if you're not concerned about higher interest rates, we will pay 3% cash back on everyday purchases not to exceed $7.50. We also realize that we're a community bank and we have limited ATM access. So we will refund $25 monthly on any foreign ATM fees that you may incur. And so with that, the question is, well, how do we become eligible for it? Well, there are 3 criteria. One, that you allow us to send you e-statements, as we are trying to be environmentally conscious and save some trees. So if you allow us to send you monthly e-statements, that's one of the criteria. The second is something that we do pretty much on a daily basis, but we only require that you log on to your online banking portal once per month. The third and most challenging, if at all, is that you swipe your debit card at stores, gas stations, POS transactions on an average of 3 times a week. So that's 12 times a month. If you have 12 debit card purchases, log on to your online banking portal once a month and allow us to enroll you in e-statements, you meet the criteria, and you can either earn the 2.5% APY or you can opt for the 3% cash back on everyday purchases. And this is a personal account only. This is not for businesses. This is for individuals, and you're eligible to be associated with one CASASA relationship per individual. We also have a partnering CASASA Saver, which pays 0.75% APY on your savings account balances up to $25,000. If for whatever reason on a particular statement cycle you do not meet the criteria, say you only have 8 POS transactions, that's okay. You won't receive the reward for that month, but your account will still be free. There will not be any monthly service charges affiliated with the CASASA relationship at all. No minimum balance, no monthly maintenance fees, no direct deposits required. So either you win or you enjoy the benefits of having a free account. That's CASASA.
That is definitely your pride and joy, right, Jackie? I can
Absolutely.
tell. So give the web address for those who want more information, obviously, about Industrial Bank, and then those that want more information about the CASASA program.
Sure. So you can actually visit us at, I know it's www.industrial-bank.com. And we're a relationship bank. You can always give us a call at 202-722-2000.
Okay, perfect. Now, is Kwasi on the line?
Yes, Kwasi's here. Can you hear me okay?
Kwasi, yeah, I can hear you perfectly. All right, great.
Okay.
Yes.
Great.
So I'll ask the question again, and so that way everyone can hear it. So how do you help those businesses who have been afraid to go for a loan in the past be confident enough to go to Industrial Bank and to ask for a loan? And what do you do with businesses who've been turned down in the past for a loan? Because we know many times black businesses, unfortunately, and businesses in general, as you try to grow your business, many people incur credit issues. So how do you help those businesses become to the point to where they can access a loan?
Certainly. Excellent question. So the first thing is the bank encourages beforehand through our marketing clients or prospective clients to call into the bank and even ask. So for those who on their own may feel apprehensive about calling in or coming into a branch, we do a lot of promotion throughout the area that we serve to encourage clients to come in and have that conversation, which is the first step in the cultivation and relationship development that we're discussing here. It's that first line that establishes that comfort level, and we talk through it. I mean, there's an actual consultation of sorts to discuss their deal, discuss different approaches which the bank will take to go about obtaining the financing. So I think the first thing that we do is the encouragement through our marketing process. Then after that, the call itself is, again, let's discuss your deal in detail, as much detail as you have. So we'll ask all of the questions that are pertinent to a deal and transaction. We talk about what we can deliver. We talk about different options. And we like to put together a timeline and time frame by which, again, we think we can obtain what is the ultimate goal, which is the financing commitment for any loan. Now, having said that, I just want to pause for a second, because one of the things that is important to note for any prospective client is that any kind of cultivation of a relationship takes time. And it's not always, well, we have the conversation today and you can expect an answer tomorrow, particularly when you have maybe a startup transaction where, you're still formalizing your business plan and so forth. And just due to the fact that you submitted an application, we as a bank do have a time that we have to respond. So you may be declined early on due to the application itself not being complete. However, that declination is in no way a means of don't contact us again, because we will tell you, hey, there's something here. Come back to us once you have collected the information that we're requesting, or once we've talked through again whatever those initial hurdles were. So again, this is all a part of the relationship development, which is key in this process. So and then I think the third question was, kind of give an example. So I'll give you an example of a deal that actually took several years to do, but the reason why it took several years was because of stages. So we recently did a deal maybe 3 years ago that involved a medical care provider in an economically downturned area of Washington, D.C. And it was a startup by nature because they had just established the entity itself, so there was no prior historical information to analyze. However, the history and the story here is that that one of the principals in the deal had 25 plus years experience in the medical profession and realm and as an administrative, and so that was key to the deal. But what's even more interesting about that is that principal's son, I had the pleasure of doing a deal with 4 or 5 years prior to this startup coming to us. And he and I did a transaction, or actually several transactions, where he was operating in the capacity then as a real estate developer. And he established a history with the bank as a startup real estate developer then that actually carried over for years down the road, so that when this opportunity came to do the healthcare operation for them, there was a familiarity. So there again is why the relationship itself is extremely important, and we don't discount that. And it actually is funny because it goes to what Star said earlier. When the gentleman and I reconnected, we talked about our kids and families and what's been going on, between that period of time of real estate development to now the healthcare center. And so getting back to that healthcare center, we talked through the deal, looked at projections, went through business plans, made sure that we got our arms totally around what the deal and transaction was. And so what we were able to do for them was provide financing that allowed them to acquire the site, perform construction and renovations to the site, and now it's a full-fledged healthcare operations, multi-million-dollar company. And also what was important for us, it created, I want to say that project created about 30 or so jobs, which was huge for the bank because, again, that's part of us serving our community. So that's all a part of, again, the relationship development that's involved and the benefit of establishing a relationship with your community bank, where a lot of times our competitors, quite frankly, won't necessarily take the time to develop and cultivate that same relationship. And that is what we feel is one of the difference makers that separates Industrial Bank from our competing banks out there.
That's a great story. Now, I'll put you on the side here a little bit. That was a black-owned company, correct?
Yes, it was.
Okay, perfect.
Yes,
perfect.
it was.
Which is good.
Yes.
Good. So,
and I would tell you the area of D.C., but I'm not sure everybody knows D.C. like that. So that's why I just said it was an economically downturned area, but it's the diamond in the rough now, and that area is slowly but surely changing as development is going on around it now in D.C.
Now, that is such a great point because I think, again, as I mentioned earlier on the phone call, it's important for our members to know, and one of the things that I think I'm really passionate about is making sure that our members build a relationship with our black banks and with Industrial Bank early, even if you don't need a loan right now. Because that was a great example. Even if you do not need a loan right now, build a relationship early. That way, when you do need one, you already have that relationship, and it's already there.
Certainly. Yes.
Which is good. So, what do y'all say to the point? And I've heard this from some other businesses as well, business owners, who say that the bank only wants to loan money to people who don't need it, or the bank only wants to loan money to people who have already made it. So those who are struggling. And I just had a business owner who I was speaking to up in New Jersey a few days ago. She said they make about $10,000 a month, and she said, we cannot get a loan. She said, they only want businesses who are making more than them and who've already made it. How do you respond to that?
So what I would say to that is I would tell anyone, and it's the truth about all institutions, the way banks make money is to lend money. It's through interest income and fee income. So I think it really kind of comes down to which financial institution you're working with. In our case, again, we want to do the deal, and it's clear with the relationship development that we perform that the incentive is to get your deal done. And to speak to that even more in depth, that's why when we get to the point of, again, relationship cultivation and development, it's important to let prospects know that it does take time to do so. And I know that can be frustrating, but believe me, the relationship piece and the development of it is going to be key and serve you better in the end than if you go to other institutions that won't, again, take the time to understand your story, understand your operation, understand what need and benefit you're bringing, not just to you as the business owner, but to the community that you serve, which we also serve. We want to see the growth and development of our business owners as well as the community by which our owners are occupying space, operating within, and serving. So that's what I would say to that piece, is that that's how we would engage our clients.
So to that same point, and before I ask the next question, anyone that has a question that they would like to ask, please email me. You can email me directly at Brian, Brian, at usblackchambers.org. I think everybody has my email address, Brian at usblackchambers.org. Email me your questions. I'm going to start to get ready to line people up. We're going to open up the lines here in a few minutes, and so I'll be taking questions. So go ahead and email those questions to me. So which is important. So how long does it take to build a relationship with the bank? How long does it take before the bank knows me, I knows them? Because sometimes I equate it as dating. So how long does that dating process take with the bank before we can get married? How long does that take?
To be honest, it varies. There are deals, clients, transactions that come to the bank, and the client is really well prepared and has a package that from the on-site we're able to move forward with it quickly and aggressively. I'll give you an example that we're working through now, which we're hoping to settle. It's going to be a sizable SBA loan, and it's a loan north of $3 million, and it's a startup in that the second location is a startup, but the initial location had been in existence nearly 20 years, and we took the prior year's experience at the existing location to develop and look at how we could do this new location startup and put an SBA package together with it. In addition to that, and I'm hoping this answers the question, when you say how long does it take to develop that relationship, when I received that package from that client, I told him right there on the spot, I had a very, forgive my dog in the background, I'm working from home.
No problem.
That they gave me a very thorough and complete package. I mean, it was really so thorough and complete. I didn't have any major questions regarding the analysis and review and due diligence on the deal. And so given that, it probably took us maybe a good month to get our arms totally around it and prepare the package in a manner that would be acceptable to the SBA. We eventually got it approved within, let's say, 30 to maybe 40 days, so like I said, about a month or so. And now it's in process, and that's why I say we hope to get it to the finish line. It's in the process now of the SBA component of it being resolved so that we can settle the loan. So it can be a short turnaround, but then it can be a long turnaround depending, again, on how thorough and or complete the package that's submitted to the bank. So that's what you have to take into account when you're talking about timing and the relationship development and understanding the relationship enough that where you can move forward on a deal.
No, that is such a great point.
And that was also a minority, by the way, that was also a minority child care business, just to point out, which, by the way, is obtaining financing to acquire property in a majority area of Washington, D.C., very expensive area of D.C. You know, again, when you talk about $3 million. So I just want to point that out.
No, that's definitely a great point. That's definitely a great point. So I hope everyone is hearing the recurring theme, relationship. Relationship is about building that relationship so that you can build over time. And I remember, and you know, just from, I study businesses, obviously I'm in business, but I pay attention to businesses of all sizes. And one of the things that I've come to realize is that those that really grow and grow over time, they've developed a great relationship with the bank, because the key is they didn't go to the bank for one loan. They went to the bank for one loan, they paid it off. I just told someone the other day, I said part of building a relationship is going after a loan with the bank and getting a small loan, paying that off, and then going back and getting a larger loan. That way now they see your history, they see how well you're doing, and then they see how you really will pay the money back, because obviously banks are in it to make the money from the interest and make sure that it's paid back. But large institutions, they all take loans, but they take them out over time. And so we're going to grow, we're going to be able to grow and grow over time. So tell me really quick, I'm about to open up the line to tell me about the SBA-backed loans that Industrial Bank has that is backed up to 50%, and also discuss collateral with that SBA-backed loan.
Okay. So, excuse me, the SBA offers various products and services. The most common one, or the most common, are the SBA 504 and the SBA 7A. The 7A is more so designed for your startups, but it can also involve, you know, real estate that's owner-occupied transactions, where typically a 504 program is dealing with your commercial real estate that's owner-occupied. So that means that as an owner-occupant of a property, if you were buying a property, you need to occupy more than 51%, or at least 51% for it to be owner majority in terms of that transaction. And so the 504 guarantees up to 50%. The SBA 7A does a guarantee up to 75%. I tell people that between the two, both are great products, but between the two, there's more flexibility with the 7A, I have found. But understand, when I say I have found, that that's on a case-by-case basis of the type of transactions that I'm dealing with. So
well, let me jump in real fast, because a lot of people don't understand the difference even between any of those loans.
Yes.
If you could bring it down to elementary level, and then after this, I'm going to open up the phone lines. But explain to them the process of the SBA-backed loan up to 50% and then up to 75%.
Okay. So here's what you have to know before you even do an SBA loan. And again, this gets back to the cultivation of relationship and understanding your deal. Banks, in order to even have an SBA loan approved, have to obtain approval within their loan policy and guidelines, meaning that I have to underwrite your deal, obtain the package for your deal, that at the end, when it comes to an approval, the SBA says this stands alone without our guarantee. the SBA guarantee, when you look at it, is really supposed to be that icing on the cake, or that additional level of collateral that just makes everyone more comfortable at the end of the day. But understand, before we even get to that, we have to underwrite the loan, given our due diligence, and again within our loan policy and guidelines. So that again gets back to the relationship development and taking the time to understand your deal, because you may have a good idea and you may show that you have the projections and the capacity to do the deal, but we still have to make sure, again, it works under the bank's piece first. Then once you go through that, there are items that are required by the SBA, and they let us know what those items are, and it varies by product. So again, the 504 is dealing with the guarantee up to 50%. The 7A is up to 75%. And each one of those SBA products have different requirements in terms of what the SBA ultimately needs for approval, and what will be acceptable to them in terms of transactions. There are certain deals just by giving the operations they won't do at all. Another thing that's important to know about SBA deals are you have to have, it's I guess the government's version of a credit report. You have to have a CAIVRS report performed on you before they will even consider your deal. And the CAIVRS essentially is, again, it's a report that the government runs to make sure that you don't have any outstanding losses to the government. If you, as an individual or as a company, have any outstanding losses, the SBA won't do your deal until those losses are resolved. So
let me jump in right there, because I have a question. So let's say someone has a loss. Let's say someone was turned down for a loan, and if you could answer this in 30 seconds, then I'm going to open up the line. Does Industrial Bank recommend anyone or a service that will help restore their credit and restore them to the point to where they can get a loan?
That's a good question. I don't know that we are able to really refer anyone in situations like that. What we can simply do, or what I know I've done, is disclose what the issue is and, kind of make some roundabout suggestions, but we can't necessarily direct you to a third party to handle that for you.
Okay.
So
that's
you understand?
Yeah, I think that's
more of a liability issue than anything.
Okay, that makes sense. Well, that's where we come into play. So if any of our members go to you and for whatever reason they're turned down, they can come back to us and we can refer them to a different individual. I do want to ask Staria or Jacqueline if they have anything to throw in before I open up the line.
Hello, everyone. I hope that you are enjoying the conference call. I wanted to jump in for a second. For those that are not members of the United States Black Chambers, we would love to have you as a member of our chamber. You can join today as you're listening on to this conference call. You can log on to our website. The web address is www.usblackchambers.org. Chambers is with an S. So again, that is www.usblackchambers.org. Log on today, click on the link that says join now, and you can join the United States Black Chambers, the national voice of Black business, where we are the headquarters for 135 Black chambers with an association of 300,000 members. Let's go back into the call.
I'm going to ask this question. This question actually came from Chanel, and everyone that sent me a question, I'm going to send you an email on how to unmute yourself here in a second. But I'm going to go ahead and ask Chanel's question. Chanel Evans, and the name of her company is Competitive Edge. And Chanel asks, how can they build a relationship with the bank if they are out of the area? I do understand that the bank can also partner with some Black banks across the country. How can they develop a relationship? Just if you could answer that real quickly.
Yeah, that's correct. What we do when it's out of our marketplace, we'll look to do what's called a participation loan with a bank in the area you serve. So provided that they are in a bank and can do participation deals, we would look to partner with that bank out of our marketplace.
Okay, so you partner with them. So let's give an example real quick. So if someone is in North Carolina and there's, I think it's Farmers, what's the name of the bank? I think it's, Farmers and Merchants, something like that.
Mechanic.
Is the black Farmers and Mechanics. Farmers and Mechanics, that's a black bank in North Carolina. So how would a business in North Carolina partner together with Industrial and Farmers? How would that process go?
So that's a good question. We actually have a participation deal with them in North Carolina for a pretty sizable church in that area. And again, we Farmers is is what would be called the lead bank in this transaction, meaning that it's in their marketplace, and they engaged our bank, Industrial Bank, to participate in that deal. And all that simply means by participation is we buy interest in that loan. Now, in order to buy that interest in that loan, we have to, again, underwrite the deal as if it was in our marketplace and according to our loan policy and guidelines. But that's how a participation deal would occur and how you would be able to establish a relationship with a bank out of your marketplace.
Okay. So let's say, for instance, they're in Ohio. And I think there may be a black bank in Ohio. I'm not really sure right now. Would they call Industrial and just start to build a relationship with you, open up an account, or would you just immediately send them to the black bank in Ohio?
The recommended start would be okay. Mm-hmm.
Yeah, go ahead, Jay. Go ahead, Jackie.
You go on, Jackie. No, go. No, answer. Go on, Jackie.
Because he mentioned open an account, and so if anyone's in a location where there is a minority-owned community bank, we all have pretty similar missions, and we all have pretty similar structures. So obviously, for convenience purposes, I would just advise you to seek out your closest, minority-owned / community bank. However, if there is none, and unfortunately there are too many states that do not have one, you can have a relationship with us. We have certain services such as remote deposit capture, where you can make deposits into an account using a scanner on your desk. We have mobile banking on the consumer side, soon to have it on the business side, where you can take pictures of checks and deposit them using your cell phone. However, I do understand realistically that wherever your operating account is, you may need to be able to walk into that building to sit down and have conversation, because that is a very important aspect of relationships. But what I would say is any savings that you have, any residual money that you have, seek out a minority bank so that you can invest that money or deposit that money in, money that you don't have to interact with on a daily or weekly basis, because, again, remember, that enables that particular bank to be able to reinvest into the minority community. That's from an account perspective.
No problem. Angelica, are you there, Angelica? I just sent you some information. Angelica Gray, if you can unmute yourself. And everyone, we're going to open up the lines now. So if you could unmute yourself by dialing *6. You can unmute yourself by dialing *6 if you have a question. Angelica, are you there?
Yes, I'm here. Yes, I'm here.
Okay, go ahead. Go ahead and ask your question.
My question was surrounding the application packet, because you said the company had given you a thorough and complete application packet, and you didn't really need any other questions after that. Mm-hmm. So I just wondered what all is in. What would you consider a thorough and complete package?
Great question. So if you're talking about an established business, again, one of the benefits of this particular deal that I was telling you is they had a prior location for some historical background, and then the new location that we're looking at financing is the startup portion. And so given their historical operation from the initial or their first location, they were able to provide us organizational documents, which are your articles of the corporation, your bylaws, your certificate of good standing, tax ID information. They were able to give us 3 to 4 years of historical financial statements. They had a section that involved very detailed projections for the fee schedule and pricing of those children at that child care center. At the projected or at the new child care center location, as well as at the initial one, so we could do a comparison analysis. They had market information dealing with the new marketplace they were moving into, because it was a drastically different location that they're looking to move into. The current location, or the initial location, is in a, just quite frankly speaking, predominantly black location within Prince George's County, and they're moving into an area of D.C. that, in Georgetown, again, I don't know how familiar anyone is, very different in terms of diversity, so we'll just say that. But they had market analysis to break down that kind of information. They had detailed information on their construction budget already, because there was a need to do some construction renovations to the new location. So when we talk about details, or when I'm talking about details, it was that level of detail that was already provided. They had resumes on not just the owners, but the various members of their staff. I mean, again, it's that kind of thoroughness and completeness in the package that was submitted, and it didn't require necessarily a lot of going back and forth to obtain it. Which, by the way, is no blame to any customer, because if you don't know what you need to put in it, you don't know. In this case, this particular client just knew what to put in, and it was that complete, and it allowed us to move more efficiently.
Okay, perfect. Angelica, if you could just mute yourself the same way that you unmuted yourself, that'd be great. I'm getting ready to go next to, now I don't have her name, New Wave. New Wave, you there? If not, I'll ask a question for her. Give me 1 second.
Can you hear me?
Yes. Okay, go ahead.
So my question was about, one of them was answered, about the location.
Give your name and business first.
I'm sorry. Rashida Lovely, and my business is New Wave Enterprise. So my question about the location was answered, because I'm actually out of Scranton, Pennsylvania, so I'm not in the area. But what I was wondering is about your policies about microloans. Not all businesses need very large loans, but it's very difficult to even secure microloans or mid-sized loans if necessary. So can you tell me what's your policy when it comes to the smaller loans or microloans or mid-level loans? Is it aggressive because of the needs of the community, or do you not look really in that direction? So if you could just clarify that for me.
Yes, so good question, great question. So to be very specific, we are very aggressive in terms of doing microloans. I interestingly enough, I can tell you about a $3 million loan, and I can tell you that I get loan requests daily for between probably $2,000 and $100,000. I probably get 5 to 10 calls on that a day, and so when I say that I get those calls, we're getting those calls because we've encouraged clients to apply regardless of the loan amount. We don't just say we're only going to do, the $500,000 or the multi-million-dollar deals, and we're not going to do the smaller deals, because, like you said, in our community that we serve, you may not need that much money. And for you, a $20,000 loan may be sufficient, or a $10,000 loan. So we do look to do aggressively microloans. The underwriting process is the same, even though we are, and when I say it's the same, it's the same as if I had to underwrite a multi-million-dollar loan. Mm-hmm. In terms of the criteria that we look at and it fitting within our policies and guidelines. That said, I don't necessarily need as thorough a package as like I did on the $3 million deal as maybe the $20,000 deal, because there's just some basic things that's maybe given where you are and so forth. It's just not required at that level, if that makes sense. But what we do is we'll talk that through with you so that you know exactly what you need to submit for your microloan, and once you provide us information that we state is needed, then we'll go about processing it and underwriting it for approval.
Great question, Richard. Yeah, if you could just place your call back on mute, Rashida, that'd be great. I think that was great.
Process? Is it star 6 again?
Yeah, exactly. Star 6.
Oh, thank you.
No problem. I think that's such a great question, because one of the things that I realize about black people is we're very resourceful. So sometimes we know how to do a lot with a little. Unfortunately, that's been the case, but that's a good quality. So to the point that some people may only need $10,000 or $20,000, $50,000. So I'm definitely going to encourage our members, if you're looking for a loan and if you've been thinking about it, definitely give Industrial Bank a call after today and after this phone call, and let's see exactly what they can do for you to help you grow your business. So I'm going to go to Jimmy Harris next. Jimmy,
one more question.
You got time for one more question?
Yes.
Okay.
Yes,
this
is Gene.
Right.
To piggyback on the previous question,
I'm sorry. One second. Who's calling?
Gene. Gene from Bluestream.
Okay, go ahead, Gene.
Yeah, what I wanted to know is, what about loans as far as not a traditional loan per se, but more like a line of credit / PO financing type of loans, whereas you want the availability to have access to cash when you have a PO maybe for a larger amount than what you can actually finance in-house. Do you guys do anything similar? Like, I know it's probably a little creative, but...
So what we do with specific regards to lines of credit, and this is, it does vary by loan amount. Obviously, when you get into the higher dollar amounts, the preferable, well, not even preferable, we have to look at what the collateral is. On your micro loans, the collateral may not be as significant or, let's say, it's labor intensive, given that you may not have accounts receivable. Typically, lines of credit are secured by what's called accounts receivables, and basically we look at what receivables you're getting in for any particular type of contract, and the bank will typically, and this is throughout the industry, so it's not unique to our bank, it's throughout the industry, typically banks will advance on your line those receivables within 0 to 90 days. They do that at what's typically an 80% advance rate. So a $100,000 loan, if it's, and you have receivables of $100,000 within 0 to 90, you could advance up to $80,000 at that one time. So that's how that would work. Now, what's interesting about that is if your receivables drop below that $100,000, you then need to curtail your line of credit appropriately so that it's within that 80% advance rate. So I'll just point that out. Now, let's assume you don't have receivables, and so we do have to get creative and so forth. We have to look at your business assets to see what we can collateralize to deal with. We look at if you have a home and there's equity in your home to see if we can use that as a form of collateral, because you do need some level of collateral to shore up a line of credit request, unless the bank agrees to do it on an unsecured basis, which does happen every now and again. But let me be clear, that every now and again is really a case-by-case basis when a bank will look to do a line of credit unsecured. And it's probably safe to say case-by-case and by a limited dollar amount.
So real quick, 5 seconds. Let them know what collateral is and why. 10 seconds. Why collateral is so important and what it is.
So the collateral is our second. Collateral is our second source of repayment. So what we're looking for initially, using again accounts receivable, you have accounts receivable that as those accounts convert to cash, we expect you to pay us through your cash flow from operation, which is coming from those receivables. So your primary source of repayment on any loan is your cash flow from operations. That's kind of the standard generic term. If for some reason you are unable to make payments from your cash flow from operation, our second source of repayment comes from the collateral securing the deal, which basically means that we need some form of asset or collateral that we can liquidate to be repaid in the event, again, you can't pay from your primary source, which is your cash flow from operations. Then the third source gets into guarantors, which, again, you have your primary source, your secondary is your collateral. Guarantors are what they call your tertiary source of repayment, and that's when we come to the principal or owner of that company for their personal cash flow to come in to repay that loan that at that time would probably be in significant default if we had to go to that third level of repayment.
Okay. In the interest of time, I know we're actually over time. I want to take one final question, then we can wrap it up there if that's good with you, Quasi.
Yes, that's fine.
Okay. Jimmy Harris?
Yes, sir, I'm here.
All right. How's it going?
Going well,
introduce
thank
yourself and tell everybody what you do.
Yes, my name is Jimmy Harris. My company is 86 Energy. We're involved in. I have about 3 trucks right now that we run, and then I'm right on the cusp of getting a government contract, and then there's some other things that I haven't worked. What I was wanting to know is, could you talk about security? You know, I got enough activity right now. I think I can move some of my stuff over to a black-owned bank. And one of the things is security. I do stuff with Wells Fargo right now, and the reason why security is important is because the guys that I have running the trucks, they're all over the country, primarily the Northeast, and they have cards that's tied to a bank account that I have set up to where I just push money in there, kind of like on a weekly, daily basis type thing. And what I was wanting to know is, could you talk about security in fraud? You know, how do you identify fraud? Do you have a mechanism or a system set up to where fraud can be easily identified? And I get a text or a call or something like that if something is going on that's suspicious on the account.
Okay.
Yes.
Star, yeah, I would say Star may want to take that one.
Most banks, well, not most, all banks are required to have a means to monitor transactions and customer behavior as a part of federal regulation, the Bank Secrecy Act. So we do have a means to basically create a customer profile for you where we get an idea of the types of transactions in your business setup. So you have multiple users who have access to cards, and getting an idea of what those typical transactions would look like and those dollar amounts would look like. And then what happens is when you are to have an anomaly, so to speak, of that kind of behavior, someone is using that card outside of a 25-mile radius that you're normally used to them making purchases, or the dollar amount is outside of the average amount that you're used to, we would get an alert to say, hey, we need to do a little bit more research on this transaction. We would also reach out to the customer to say, is this normal for you? Did you authorize this transaction? Are you aware of something like this? Is this something that is typical for you? We had that situation happen to us recently where a customer of ours, their checks were compromised, and someone who had basically taken their checks and was issuing checks to people using the account number and the routing number. Well, we knew right offhand that was not typical behavior for this particular customer, so we were able to stop them from actually incurring a loss and helping them to, kind of find out what was going on. So to answer your question, we do have a means to notify you if there is transactional activity that is outside of the norm, and we do have a means to monitor customer transactions to ensure that, you're not being defrauded, and to ensure that the protection and the security of your account and your non-public personal information.
Okay, thank you.
You're welcome.
Okay. Hey, everybody. For some reason, I got kicked out. I think we're good. Can you guys hear me?
Yes.
Okay.
Yeah,
Perfect. Any last things that industrial? There's one or two other questions that I do have. I want to be respectful of your time unless you have a few more minutes. But any last thoughts that your team have that you want to add? But I do have one question I want to throw out there. One of my members, her name is Pat Freeman, and she She said, I want to empower others in the community to choose black banks for businesses, business loans, and other purchases. What suggestions do you have? So all of you can answer that question, and you can give us your final thoughts.
Well, I think any business person will tell you that a customer experience is the best advertisement that we could actually have, and so we encourage people that are not completely familiar with us or not aware, go into your community banks or come to Industrial and just have a conversation with someone who works here. Our president says that all the time. If you go into any banking center, any location, you're going to get great customer service, and we pride ourselves on that. I think what you need to understand, and I think the biggest misconception about community banks and minority-owned banks is that they don't offer what the big banks offer, and that's not true. We do offer a full range of checking accounts, saving accounts, certificates, loans for residential and commercial. We are a full-service bank, and I think the biggest misconception is that you can't get services with us that you can get at those larger institutions, and that's not the truth. We are here to serve you. We're here to put you into an account that's suitable for you, and we're here to build a relationship with you. And I think that's the reoccurring theme that we tell everyone, and I think that's also what most of our customers would say. If you were to be able to speak to any of our customers, they would say the same thing.
Yeah, and what I would do, this is Kwesi, what I would add to that in terms of, really what to expect and how you should proceed going forward, I would tell anyone to be patient with your minority bank. And the reason why I state being patient is it does take time to develop a relationship. It takes time to understand what your needs are and how to meet those needs. And at least for our bank, I can speak to, we're going to take the time to, again, understand your story and understand what all is going on. And that could take some time. It may take a couple of no's to get to an eventual yes. It could take some time to get that approval. But believe me, as I like to tell people, we're doing everything we can to get an approval. We, as I said earlier, banks are in business to make loans and to make money because we make money through loans, through fee income and interest income. And so it takes patience sometimes to get your ultimate yes, and you need to have that patience. And again, patience in that it's moving forward, not patience in terms of sacrificing quality customer service, because we aren't here to sacrifice customer service. We're going to give you, A1 in terms of that. Just understand it can take time to get to your eventual approval answer. And so that's what I would encourage to be the takeaway, one of the takeaways here.
This is
a growing social media platform. We have a growing social media platform. So a lot of the stuff that we're doing in the community, financial tips, customer spotlights, we do that on our social media platforms, on Twitter, Facebook, and Instagram. It's all Bank Industrial. So if you're just interested in seeing the things that we're doing in the community-specific customer profiles and different things that we're doing, you can follow us on those social media platforms as well and get an idea of how we're reinvesting in our community.
Give me your website address again, and then your Facebook page.
www.industrial-bank.com, and our Facebook page is Industrial Bank. If you just Google Industrial Bank, it's going to be a red logo with a gold arrow.
Perfect. This is good. And I just also want to end this by saying to all of our members, all of you who may have been turned down in the past for loans, and we do know that traditionally many of our black businesses do not go after loans because they're afraid that they will be turned down. And so if you've been afraid in the past, I'm going to ask you to go for it. Call up Industrial Bank, begin to build a relationship with them, go onto their website, email them, and reach out to them and see exactly what they can do. And the truth is you may be turned down to what Kwesi said the first time. You might be turned down the first time, but it's okay. Most of the people that I've seen who've grown large businesses, they've been turned down before. So join the club. So if you're turned down, just pick yourself back up, make the changes that you need to make, and go at it again. Don't turn away from all black banks just because you're turned down by one. So this was great. I really appreciate Industrial Bank, and thank you to all the members. I'm going to stay online for a few more minutes just to allow the members to kind of network and talk. Quasi and Starry, if you guys want to stay online, you're definitely welcome to. If you have to go, that's fine. But we're just going to allow them to kind of talk back and forth, introduce themselves for a few more minutes here while we're still online. So thank you for your time, and we look forward to doing this again with Industrial Bank.
Thank you.
Thank you so much. I can stay on
a
few minutes. I got about another 10 minutes I can stay on if you need to.
Okay. That'd be perfect. Yeah. Okay. All right, great. I think there are a few more questions. If someone has a question, go ahead and hit *6 to unmute yourself, one at a time, and we'll see. We'll let Star and Quasi answer your question. Anybody have a question? Go on once. Anybody?
Hey, this is Russell Douglas. Can you hear me?
Yes.
So my question was along the line of credit. I don't think I heard all of that or heard it correctly. As in a retail business, a line of credit is more important to buy inventory. So I think I heard that was harder or something. And so I just wanted to get some more information on that. If I was to call Industrial Bank, and how would I establish a line of credit?
Sure. Good question. So you would go about applying for a line of credit the same way. What it comes down to is, again, the type of collateral that you would be using to secure that line of credit. In this case, you mentioned the example I gave earlier really spoke to the collateral that's normally in the form of accounts receivables. However, you just stated, if I heard you correctly, inventory. And if that's inventory that's converting, meaning like you're a manufacturing type of company and you're buying, and this is just an example, like T-shirts. And so you're buying T-shirts, but you know that those T-shirts are going to convert through sales. We will look to the inventory as collateral, but the significant difference between a line of credit secured against accounts receivable and a line of credit secured against converting inventory is the advance rate. And typically the advance rate on a line of credit that's secured against inventory is 50%. And that's on the high end of what the bank is going to assume. And again, this is pretty much industry standard. It's not limited to us. It's not because we're more conservative than someone else. It's just, again, the advance rate that that a bank is going to be willing to do given inventory versus accounts receivable collateral. And the reason being, just so you know, I don't know if you've spoken to other bankers that would tell you this honestly, is when it comes to inventory, it doesn't matter how new, how shiny, whatever it is, most banks only assume that they're going to get 50 cents on the dollar, which is why they only will advance 50% on a line of credit that's secured by inventory.
What do you mean by that? They assume that people won't pay it back? Is that what you're saying?
No. What happens is, so again, it gets to, that's our secondary source of repayment. And so I'm using a T-shirt manufacturing company, right, as an example. If we give you financing for those T-shirts, and we have to now take those T-shirts, we're figuring we're only going to get 50 cents on the dollar. You see what I mean? And that's how inventory is looked. And it's not, we're talking about specifically lines of credit here, but that's even if you were, let's say, doing a commercial kitchen, right? And you buy some heavy-end new type of stove, or what have you, industrial stove. Let's say that stove is $200,000. The bank is going to only assume a 50% collateral basis for that, because they're going to say, even though you paid $200,000, if that operation went into default, the best we're going to get is 50 cents on that dollar. And again, that's the best case scenario. There's some who would discount it even more. But I just want to give you the difference between why we would advance more with a line of credit secured against receivables versus a line of credit secured against inventory.
That is a great point. That is a great point. Wow, I didn't know that, so that's good for me to know. I want you to talk about this. I meant to talk about this earlier, but many times I've talked to a lot of individuals who've gone to black banks and they just don't understand why they can't get this massive loan from a bank that they maybe can get from J.P. Morgan. And so this might be or Bank of America. So this might be a question for Staria. Talk about the risk in terms of a small black-owned community bank compared to these large institutions like Bank of America, Wells Fargo, J.P. Morgan, and on and on and on, how they have these large sums of money, and then how small community banks are dealing with their sums of money in terms of being able to give out loans.
All banks have to be insured and have to have a certain level of insurance. But yes, the larger banks do have the capital and resource to kind of undergird them a little bit more in terms of what they're able to lose before it becomes a pain point for them. But you also have to understand that a lot of times for smaller banks, believe it or not, sometimes our risk is even greater because a lot of those upstarts, those starting businesses, those small businesses that get overlooked by the big banks, they come to community banks where we're working a lot harder. Like Kwesi says, we're working very hard to make this loan work. So we're taking into consideration the guarantor. We're taking into consideration that we may use, that you have, some equipment or something versus you have accounts payable. We're going to look at all these things to try to make this loan happen. Whereas if you go to a larger institution, yes, they can take risks on a lot of the bigger deals, but they're not going to spend time on those small deals. And sometimes those small deals are really the risky ones because who knows what that restaurant that we just gave them a $400,000 line of credit, who knows how viable that restaurant is going to be next year, or that coffee shop, who knows if that coffee shop is going to be viable, or the new daycare, if you're going to be able to fill the seats in the daycare. So for us, if we do 2, 3, 4, 5, $500,000 to $1 million loans for these small businesses and they don't work, that puts us in a very, bad position versus a large bank who has the capacity to do that. So just because they're a larger bank and they can do a lot of these larger loans doesn't diminish the risk because, again, we're looking to those smaller community organizations that sometimes they don't have all the collateral, they don't have all the startup, but we're still working really diligently to make that loan work.
Mm-hmm. That's a great answer.
Yeah.
You want to say something?
Let me add to that real quick too. And you have to be careful when you're using certain language and terms, but there's bank jargon, but it's actually a legitimate term here, which is loan loss reserves. And so for banks our size to take on like give the example that Star gave, when you talk about 5 $1 million deals, well, for us to take a $5 million hit, even though it's 5 separate deals, a $5 million hit is way more costly than a Bank of America or SunTrust or whoever, who are billion-plus dollar banks with significant loan loss reserves, a significant amount of capital, and capital that they can gain access through the stock market. All of that plays a factor in the amount of risk they can take on a deal, where with us, as we're saying, we have to spend the time to really do our due diligence because a $5 million hit, even though it's spread over 5 deals, is going to significantly impact us versus $5 million to the Banks of Americas or SunTrust or J.P. Morgan and so forth. So please take that into account when you're considering or thinking about what's the difference between why the larger institution can do something and a smaller institution can't.
You raised something very interesting. Okay, go ahead.
And I do want to make sure I say that even though they have those reserves, again, you have to look at some of the time, a lot of the time some of these $2 million, $500,000 deals aren't even on the radar for a lot of those larger banks. So even though it's less risk to them because it's a smaller deal, it's not necessarily in their wheelhouse or their focus. Yes. And we notice that a lot of the times the people that come to us, a $500,000 deal is life-changing for some of the small businesses that come to us. And we're walking those customers from start to finish. And we're not even just doing the loan. It's after you close the loan. I mean, we're calling you. We have people. I don't even work in the loan department, and I have customers that still call me, Star, can you give me my balance? Star, can you help me with this? That's the kind of relationship that we maintain with our customers. And so, yes, it's riskier for us, but, again, it speaks to our ability to establish and maintain relationships with customers.
You said something earlier also, Kwesi. Are you guys able to be publicly traded companies like the larger institutions?
So interestingly enough, we were once publicly traded. It's something that the bank obviously can do. We're no longer publicly traded. We're closely held. That's going to come down to when management decides to do that again, if they should ever decide to do it again.
Yeah, no, that's a very interesting point. Last question, and then we're definitely done on this one. This question came from my member Vincent Brown, who's the Statesville Chamber president down in North Carolina. What working capital program do you have for construction companies, or do you have a working capital program?
Yeah, so working capital, I'm assuming in this case he's referring to a revolving type of working capital, because you can do both working capital on a revolving basis or a permanent basis. As a construction company, most of them need a working capital line of credit for projects and so forth. And so, again, that type of loan facility would be your typical line of credit, and we do provide that type of financing, and it will be secured against your accounts receivables, because we're hoping that you as a construction company obviously have a significant level of contracts, and based off of those contracts, you expect them to be paid over time, and most of that we're expecting that it's going to be repaid within 0 to 90 days. So that's what we would do in terms of providing working capital for construction companies.
Perfect. All right, so we're going to end it there. Give us your telephone number again for those that would like to call you, if you guys have the number.
Star, you want to go first, or you want me?
Okay.
Or your email address.
I was deferring to the woman here.
Of course.
Ladies
go
first.
Ahead, sorry.
202-722-2000 is our general line. It's best to reach me via email if you have any additional questions. And my email address is swilliams@industrial-bank.com.
Okay, one more time, the number and then the email address.
202-722-2000. My name is Star Williams. There's Kwesi Irving or Jackie Bowles. If you can be sent directly to either of us, and my email is swilliams@industrial-bank.com.
Okay. And you Kwesi?
Yes, and I have the same number, 202-722-2000. My email is kirving, IRVING, @industrial-bank.com. I said the same number. My extension is 3112. So,
perfect. I can't thank you all enough. You've been generous with your time. This has been great. And again, I'm going to definitely suggest and encourage all of our members, call them today. Call them. Get on their nerves, call them so much. But build that relationship with them so that you can help grow your business. Sounds great. William, Kwesi, thank you so much.
Yes.
To Jackie, thank you. And Melanie. And I look to see you all soon. Thank you so much. We'll be talking soon.
That was a great call. I thoroughly enjoy interviewing the three of them. So if you are interested in doing business with Industrial Bank, whether you be a customer, a business owner, or someone that's just interested in learning more about Industrial Bank, let me give you their web address so that you can reach out to them. Their web address is www.industrial-bank.com. Again, that is www-industrial-bank.com. And lastly, please do not forget to download our mobile app, the USBC Directory mobile app, the largest black business directory in the world. Please tell your friends, your family about it. And we're excited that you joined us for this call. We look forward to talking with you and seeing you soon and having you on some of our future phone calls. You have an amazing day. You've enjoyed this podcast, which is the national voice of black business.